Hello, everyone, and welcome to Business Morning live here on Channels Television. I am Bosi Damafai. This is where we start the first full business and markets trading week for the new month of March, bringing us effectively to the third month and the final month in the first quarter of 2019. Of course, the first quarter dominated by the political and electioneering in Nigeria. So let's get today started. I am Bosi Damafai. Let's get what's in the news, what's already in the news, and this is how we get in the new month started. We've got a lot to analyze and to talk about. President Buhari, of course, securing his second term in office in what is admired during the electoral campaign called a 4+4. That was on social media. If you're there, you've seen the 4+4, saying the president got the first 4, which was in 2015, and that he needed another 4 years. That's what the 4+4 actually means. So we're going to talk about Buhari's 4+4. President Buhari right now has made history as the second Nigerian leader to serve as a military head of state and elected civilian president. The existing current holder or the previous office holder was President Obasanjo. So let's get this started. In his acceptance speech on February 27th, President Buhari, among other things, of course, in about a 12-paragraph statement, says this new administration will intensify its efforts in security, restructuring the economy, and fighting corruption. That's what he says on February 27th. Then he says that, quote, "We have laid down the foundation and we are committed to seeing matters to the end." That's talking about the economy. Meantime, on March 1st, the Federal Executive Council paid the president, which was just about 3 days after the February 27th acceptance speech. Then they paid him a custom visit to say, "Congratulations, Mr. President, for getting a second term in office." And this was part of what President Buhari says has been reported in the media. He says there will be tough times ahead. And that brings us to that book there by Robert Schuller. Tough times never last, but tough people do. So we're going to speak a little bit more to that on the program today. President Buhari told the FEC, a part of what he says was, quote, "My last lap of 4 years, I think is going to be tough. People are very forgetful, and that's why during the campaign, I spoke about our cardinal agenda." So what is about the tough times never last, tough people do? For those of you who read this book, which was first published in 1983, that was just about the first time President Buhari himself came into political limelight as a military head of state. So we're bringing this book back to look at the principles of tough times, and they never last, but tough people do. So how do you prepare for President Buhari's tough 4 years ahead, which technically starts on May 29th. 2019, that's going to be the swearing in, or what we call the inauguration. We'll talk about that on the program today and perhaps in the days and weeks ahead. Meantime, let's check with the market. The equities market finished February negative 2.1% week on week, shading off a little bit of the all-share index to 1.26% year to date. So we started March on Friday, still on a positive reading, but the stock market took a bit of a beating in that week because of a month-end adjustment of portfolio by investors. So investors just moved to the other side of the street and pumped in significant bullish on primary market demand and the treasury market. Foreign portfolio investors, they also call the FPIs, were very strong in the week we just finished as well. And of course, central bank reduced the open market operations activity. Look at the yields at the treasuries market, crashed to 12.98%. Last year, we saw as much as 18%. Now we started the new month, little bit shy of 13% on yields. And when yields crashed on treasury bills or on bonds, it means the market is doing better. That means the government is going to pay less for those borrowings that it does on a regular basis. A big rally at the long end of the yield curve. The Naira bonds also rally on the massive injections of portfolio investment. It was described as the best performing local currency bonds in emerging markets around the world last week, just as the announcement of President Buhari as the winner of the 2019 general elections. Look at the currencies market. The Naira also had a bit of its own rally. 0.13% Naira gained on the dollar at the I&E FX window, 361.03, and flat at 360 on the dollar at the Barker Strait. Turnover at the I&E window, the record we've seen so far this year, nearly $4 billion was traded. 91% of those trades done within 360, 369 to $1 band. Quite a lot of big stories. Let's get the show started. Temple Ashaja, business correspondent, live to us from the Nigerian Stock Exchange, our studios in downtown Lagos. Temple, tough times never last, only tough people do. Do you ever have time to read that book?
I had the story, boss, and I'm not sure I read the book. I read other books.
You need to get
Good
it.
morning.
You need to get it. Tough times never last. Tough people do. 4 ways to bring in new ideas. 10 commandments of possibility thinking. You take a listen. Wait just 1 second. 5 principles of putting your problems in a proper perspectives. 5 ways to overcome a brownout and prevent a burnout. So whether it's in your employment, in health, in loneliness, fear of anything else that can block your success, you can turn your tough times to good times. I'm going to give you that lesson full after the show. But first, shoot, a very interesting market week we just finished, don't we?
Absolutely, Bosun.
Yeah.
Some 2.12% decline in the key benchmark index there we had last week. I mean, that's something that a lot of investors really not wanted to see, because a lot of analysts, a lot of traders had forecast some kind of improvement in the market, you know, post the presidential elections. However, we're seeing the other side of things, you know, playing out in the market. That was how the market ended last week. Very, very negative, except for on Friday when we saw a bit of improvement. And of course, that's simply because some of the losses, major losses, had actually bottomed out. And that's why we saw that improvement. But basically, we still have the year-to-date performance of the market, you know, in the positive territory, 1.26%. That's how it moderated on Friday, week on week. I mean, things were really not so good for so many investors. 2.12% decline in the key benchmark index to 31,827.24, with an equity capitalization that shed some 256 billion naira last week. That's for the 5 trading sessions. 5 trading sessions we had last week. We lost 256 billion naira. I mean, that's what was shaved off of the equity capitalization that now settles at 11.86 trillion naira. Now, we look at the activity level for the week. It was really negative. 1.75 billion units of shares traded last week in total, for a value of just 19.68 billion naira. And we saw in total 22,319 deals, as against more than that we had. I think 24,000 was what we had in the preceding week, the week leading up to the elections. If you look at the sectoral analysis, sectorally we were very negative, except for the gains we saw in the insurance segment of the market, and of course the industrial goods segment of the market. Industrial goods, because of the level of investments we saw in Dangote Cement, which is declaring some 390 billion naira worth of profit after tax. That's something so attractive. And of course, the fact that we have a final dividend of 16 naira coming from Dangote Cement, that pushed up the indices of that segment of the market last week. But if you look at what we had in the banking segment of the market, which was the worst hit, banking names were really down. Guarantee Trust Bank having gained some huge amounts to some 38 naira plus on the market last week, shed some 7.07% week on week. Zenith Bank was also down about 7% week on week in terms of the share price there, and that contributed massively to the negative sentiments we saw eventually on the indices of the banking sector, crashing some 5.88%. Insurance, as I said earlier, was good, some 3.01% there. A lot of investors rebalancing their portfolios had to buy some of the cheap stocks that you have in the insurance segment of the market. The consumer goods segment of the market was down 2.91%. International breweries shed some 4.7%. Dangote Flour, of course, declined some 1.49%. Dangote Sugar also lessened by some 2.33%. And Nestle, which is a market heavyweight, was down some 4.43%. Honeywell was also down some 2.88%, and that was how that sector came crashing 2.91% last week. Of course, this gives you room for a lot of traders, a lot of investors that are returning from the election trips they've gone for to now start coming back into the market, even though we know that last week a lot of foreign portfolio investors moved away from the equities markets for some disappointment that they had there. Oil and gas, mainly week on week, O&O was down some 11.54%. That really outweighs that sector. Oil and gas eventually fell some 1.33% last week, physically. If you look at the energy segment, the numbers we have there reflect the trading day for Friday. There was a movement on corn oil. Forte oil remained intact. 11 PLC was the same. MRS was also the same. But O&O on Friday alone declined by 2.54%. And if you add that to the other losses that it had recorded for the week, it came in at 11.54%. Seplat, in spite of the fact that a lot of investors are awaiting its results, was flat last week Friday. 619 naira is the share price. Total rose some 5.26%. Japol rose some 4.56% in anticipation of the news earnings that will also possibly come in any moment from now. At the unlisted securities market, the reverse was the case there. We got some good gains there, 2.09% at 749.25. We saw market capitalization at the levels they were there. Volume was also 80 million, value of 994 million naira, deals at 39, and CSCS was the most actively traded company there in terms of volume and value, and we saw interest in just 8 out of the 39 securities tradable there for the week that just ended. Bond market, Bosun gave us heads up earlier, was bullish proceedings in the bond market and of course the treasury bills market as well. We got average yields compressing at the bond market by some 71 basis points week on week, so some 13.95%. We got demand across the short and the long end of the curve, as we saw demand coming in from a lot of investors, the domestic and of course the foreign portfolio investors, on account of the fact that we had the announcement of the presidential elections released last week. So if you look at February 2020, it compressed by some 204 basis points. February 2028, 23rd of February 2028 precisely, was narrowed by some 83 basis points. April, one of the at the long end of the curve, also declined by some 63 basis points. And for the treasury bills market, where we saw a lot of bullish sentiment as well, the bullish sentiment was driven by the fact that we had a demand at the primary market auction that took place last week. We had high foreign portfolio investors also participating in the market. We had serious volume. The fact that we also had CBN's reduced open market operations, all of that brought the average yield coming lower, 170 basis points last week, Bosun.
Okay, Atempo, thank you so much. Let's put a bit of analysis into some of the numbers you've just given us. We'll see you later in the program. This is the first trading day as